I am going to start with you, Jacqueline. With a broad question, you've been investing for 15 years, is it? 2001 that Acumen was started. And we've talked a lot about how this has become more mainstream in that period, but just in terms of the investment opportunities where you see the opportunity to make greatest impact, what are the places that still excite you most?
Well, that's a hard question for me because everything excites me. In a way, what I've been thinking about all day is actually not only what is so exciting, but I have felt a sense of dissonance, quite frankly, in that in the first session, I heard a number of panelists talk about how we needed a crisis to bring impact investing into the mainstream. And I was thinking to myself, what do we have right now in the world if not a crisis? We've got a crisis around climate change. We've got a crisis around inequality that is acute and growing. And we have a crisis around, God knows, leadership, and certainly moral leadership. And so for me, what excites me is the opportunity to think about not impact investing as an end in itself, but impact investing as a means to focus in a very serious way on solving the extraordinarily serious problems that we face as a world. And so I look around this room and see many of the heroes that I've been able to work with over the last really 30 years, who aren't just looking at returns and then impact, but who live across the whole spectrum, from the grant makers to the patient capital investors to the impact investors to the more traditional investors. And I wonder if the question isn't about mainstreaming impact investing, but maybe the question is that in this moment when we hear the whole world question capitalism, do we have to change the whole game? And can the impact investors actually serve as the leaders of restating, reevaluating the way that we use capital so that it is purpose before profit, so that it is stakeholders, not shareholders, so that it is long-term, not short-term, and so that we measure what we value, not just what we can count. That's what really excites me.
Do you worry that rather than impact changing capitalism, capitalism changes impact? So as capital comes flooding in, institutions change, actually you lose sight of the purpose bit of this?
I definitely worry about that. I think that there's a real role for all of us in it, and that part of what we need to do is not only get better impact metrics, but a lexicon that is more articulate around the different types of capital that we have, so that we can raise pioneering investment that is backed by philanthropy for really early stage investing or post-conflict areas or working with the very poor. And then over time, we will see the impact investors come in because what they're looking for is commercial viability that they can take to scale. That narrative is not easy. Mm-hmm. So for us, for 10 years, we invested probably $25 million of philanthropic backed capital in the earliest stage companies in the off-grid solar for people who make $1, $2, and $3 a day. When we started, there was no commercial viability. Solar was $4. It was too expensive. There was no trust. There was no financing mechanism. But through those years, we watched the price come down to under $1 a watt. Mobile banking allowed people a financing mechanism, more and more adoption of this, so that now those companies have brought solar to 70 plus million people. That allows us then to build a for-profit $100 million off-grid fund to then prove to government that we can scale those companies, and then off-grid is faster, cheaper, and better than extending the grid. That's the kind of ecosystem, and I know Vineet uses that all the time, that we need to start building, and we need all of the different players to understand their role, that there is not one monolithic category that is impact investing.
Well, I think you've segued neatly to Vineet there with the ecosystem word. I mean, what Jacqueline's described is a much bigger kind of backdrop, if you like, for this conversation. And your attitude to impact is that you need to create a bigger ecosystem, a better environment that enables some of the things that people in this room are talking about to flourish over time. Can you dig into that for us?
So I love a small sentence to sum up what Jacqueline was saying. I genuinely believe that we are waiting for a moment where the tail will wag the dog, which is impact investing, actually teaching the mainstream to become impact. I'm a great believer that time is not far when the tail would be wagging the dog. Right now we are the tail and we are wagged the way the mainstream wants. But I'm not interested in going mainstream. I want mainstream to become us. And I can tell you on the ground, there is a groundswell of change that's taking place. It's taking place in this country, it's taking place in Britain, in Europe, and in India. And I think those who believe that impact investing will be mainstreamed are flawed in their thinking. The reality around you is very different. We simply don't want to see what's going on, and therefore we continue to have these titles, which in my view should change. Let me come back to my point, and I'm sorry for the digression. The critical point is I'm actually a forester, and therefore I don't mind saying my mind. Since I was a forester and I had no money, I started with a very small ambition. I wanted to make every poor person rich. Then with $100 with which I started, I realized that's a very ambitious and tall order. So I moved on to a slightly smaller ambition. I realized a lot of entrepreneurs are trying to solve one or the other problem of the poor. And so I said, okay, if I can't make every poor person rich, let me try to make every entrepreneur working for the poor people to be successful. My $100 became $1 million after 5 years. And in that period, I realized that entrepreneurs actually don't need just one kind of capital. They need all kinds of capital. So you need $100 if you are trying to sell vegetables, and you need $10 million in case you are trying to build a large, medium-sized enterprise. And again, going back to my forestry habit, I continued on path of trying to build everything. And so we today actually run close to $500 million. We do everything. We do microfinance, merchant finance, venture debt, private equity, and venture capital. And we also run a fairly exhaustive engagement platform like the one that we have called Sankalp. And we operate in India, Indonesia, and Middle East. The objective was, how do you actually make sure that the entrepreneur gets what they want at every level? And if it cannot happen by somebody else, or if there is nobody else providing it, then we don't mind trying to do it ourselves. So that's basically what I wanted to do.
But this goes well beyond provision of capital, right? I mean, this is everything.
Yeah.
So rule of law. I mean, how do you generate those kind of?
Yeah. So see, what happened is I actually suffered massively when the Indian microfinance crisis happened, and we learned quite a great deal about that. Generally, the governments believe the poor belongs to them. There is a monopoly of the poor, and governments genuinely believe they belong to them. And we had completely forgotten about the existence of the government in our desire to actually change the world. And as I told you, I thought I'll make poor people rich. So that didn't occur to me that there is somebody else who owns them. When that conflict happened, we started realizing that this is not a game about entrepreneur actually getting capital and building a business that deal with the poor. It's an actually ecosystem that involves the government as a very important stakeholder. It involves the large enterprises that actually have that desire and access, quote unquote, from the bottom of the pyramid. They were searching for that fortune down there, trying to miniaturize their product to sell to them. They needed to engage, but not necessarily to extract the capital from the poor, but also to create value for the poor. Now, that conversation needs to be done, and somebody needs to play a role. So the ecosystem actually goes beyond just an entrepreneur and capital and us. It actually went beyond. It brought in governments. It brought in large corporates. It brought in other stakeholders, advisors, people who could do corporate governance. So there are many other things that played in. Took me 16 years to learn all that, but I think we are still past our ABC, and we are trying to get into middle class now.
Amy, I might bring you in on that. So from an African perspective, does that resonate? If that ecosystem needs to be created, what's the institution that does it? Who convenes all of the relevant parties?
Yeah, what both Jacqueline and Vineet have said resonates a lot. I would echo their sentiment about this mainstreaming of impact investing, slightly missing the point. one of the things that we got in the introduction to this conference was the statistic was we need $2.5 trillion of additional funding in impact investing. I don't see it that way. We need to shift funding from low growth, high income countries to high growth, low income countries. And that funding will move due to the economic benefits of moving into these high growth economies. And when you look at the SME market particularly, well, let's keep it at Africa. So if you look at Africa, I think by 2050 Africa will be 25% of the population of the world, and the majority of young people will be in Africa. So those young people are going to pay, the pensions of everybody in this room. So we have an economic incentive to move the investment, and we have a personal incentive to move the investment so that we can all enjoy a good retirement. Now, in terms of how I see it in Nigeria and slightly in Africa, we have the challenge of changing our local markets as well as changing the international mindset. So how we've approached that successfully in Nigeria is by growing the real private sector, and the company I work for, Ladol, is an example of that. So what that means is you have these companies, some SME level, some slightly bigger like Ladol, who are making investments into, in our case, infrastructure, but you also see it with technology, you see it with local banks, that are changing the market. We first have to tackle our local market. So in the case of our business, we had to prove ourselves to our regulatory authorities, to our governments, important stakeholders. We had to prove ourselves to the international companies that have been doing business in Nigeria for several decades in a certain way. And that was enormously difficult. But now that we've done that to an extent, interests are aligned because the government can see that it is in their interest to have a real private sector that's investing and producing jobs. And you produce jobs in countries like Nigeria at a phenomenal rate. The multiplier effect on the jobs we produce is 1 to 10. And similarly with the international companies we work with, they've gone from being highly skeptical and in some case obstructive to a minority still, but a growing minority, now seeing this as a way to create mutual prosperity. Mutual prosperity in the local market in Nigeria means greater stability, and it means lower costs for their activities. So I can tell you from first-hand experience that it is enormously difficult to go through all the stages of development that a small private company goes through in a high-growth, low-income market. But once you get to a certain stage, the sustainability benefits are so great that you start to see exponential change happen. And I think that the markets we work in will stun the world such that the tail will end up wagging the dog, primarily because of real private sector, local investment that is driving change throughout the world, as opposed to the West coming into countries like Nigeria and making the change. It's going to be us that are going out and changing the world.
Just before I bring Bertrand in, I just want to, the three of you, how do you connect what you're saying to the people in this room who potentially have a supply of capital that they're looking to put to work in what they understand to be classic impact investing? What's the most useful thing that they can do given the scale of the challenge that you three have just laid out?
I have a really quick one, which is I think we need to. I used to be a banker in London myself, so I understand the enormity of what I'm asking. But we need to redefine bankability. When they were developing the railways in America, they didn't start by saying, okay, what's your business plan? What's your market? Give me a 200% guarantee. No, they invented mortgages so they could build the railway. And so to try and apply a completely inappropriate definition of bankability to emerging markets is the first thing that needs to change.
If you want to sell an umbrella, there should be some rain there. And generally, the bankers, the people who have money, they actually give you the umbrella when the sun is shining and take it away when it rains. You might have to just ask yourself this question, that are you making the right decision? If the growth is somewhere else, if people who are actually, ultimately the success of this country, where we are sitting here, came in because there are a lot of people who are very hungry for success, build this up. The hunger actually goes where people are actually hungry. And therefore, in that sense, capital should find itself in areas. Conserving your capital is not going to take you very far. Taking the risk with the capital will bring about change and create value. This country has proven it, so has many other countries. The developed world is a clearly signifies what it does in case you take risk. If capital stops taking risks, it's not going to actually be creating any value for anyone. So,
I would answer it slightly differently, and that's partially because Acumen now not only works in Africa and South Asia, but Latin America and the United States. And I think there are hungry entrepreneurs in every country in the world today. I would say that, and it came up in a couple of the other panels, particularly how family offices are thinking about their purpose and looking at a portfolio approach, that if we start with purpose and recognize that we have different tolerances for risk and different things that we want to do, then we can connect capital more constructively and have a greater understanding of what will come from that capital, so that there's a huge and growing role for really smart philanthropy to both invest in companies that are trying to build markets in the political economies of the poor, where everybody has a hand in the lives of the poor, so it's really hard to make things work, as well as early stage, or as I said before, some of the post-conflict areas, including some of the places in the United States. And then there's this patient capital that will be possibly lower impact returns and yet very, very high in the impact front. Then you'll have more traditional impact capital. There's an enormous need in all three areas. And so find those players that are working in the areas in which you care about. And then we need partnerships to make them happen.
Okay, Bertrand, thank you for your patience, but it would be great.
I'm a patient capitalist.
You're a patient capitalist, a patient panelist as well. Just to reflect on that, because you bring in your background two constituencies that we haven't heard from particularly today. So the multilateral development banks, Vineet says that the poor belong to governments, they also belong to MDBs, and mainstream financial institutions as well. You were previously very high at Societe Generale and other institutions. So what are the roles that MDBs and big financial institutions should be playing, given what we've heard from the other panelists?
I think we are at and I want to be a little bit more dramatic than what I've heard so far. I think we are at a very important moment, and the future is highly uncertain. As you rightly said, I just spent the 20 last years in the so-called dark side of finance, so I'm quite familiar with what it means. With the World Bank, I've tried to say I moved to the more bright side, and I hope with Blue Orange I moved to the very bright side of finance. So it's a long journey. But what I mean with that is we're just not totally out of the worst financial crisis in several generations. And we should not underestimate neither the impact nor the opportunity that it offers. What do I mean with the opportunity? On the one hand, the biggest thing that has been lost in this crisis is trust in the system. So people are pissed off with what has been done with their money, and they want to know what their money is used for. So we have to play on that. We have to play on that. At the end of the day, the money managed by pension fund life insurance is our money. So we have to speak up. It's not they, it's all of us. So I think it's important to say it, and we have the tools now with social networks, etc. We have the capacity to have our voice heard. So we should not shut up. The second thing is interest rate environment. I mean, you cannot, if you're a pension fund or life insurer, you are struggling today to meet your ends meet. How do you make your model work if you are at 0 or even 1 or 2% rate? That does not work. So with this lack of trust and low yield, you have the opportunity to force people to think out of the box. It's ample time now that we all have collectively to be smart. And we have to use it. That's the positive news. But the negative news is that, as you rightly say, the world is pretty dangerous these days. And you have headwinds facing this. I mean, in this country, in the UK, in Europe, in many areas of the world. So I do believe that we have to reset the operating system of finance, and impact can contribute. It's not the only tool. There are other things, but it's not a given. It's going to be very difficult. We should not fool ourselves. It's very difficult. It's nice to be there. It's nice to have 1, 2, 3 trillion. But we're talking about 100 trillion of money managed by people. We're talking about 200 or 200 trillion of net wealth in the world. So it's just a little bit, But as we all know since Archimedes, with a little bit you can make a big change. So that's really what I have in mind. It's time to move in that direction, and I don't want to wake up in 10 and 15 years and say, oh my God, we missed the window, it's over. So that's really my message. So coming back to your initial point, I think everybody has a role to play. But let's again be realistic. I mean, if you look at the environment, commercial banks or universal banks, I mean, depending on how it evolves in the US, I just don't want to comment on that, although I have some ideas. Commercial banks are stuck. I mean, they are struggling with their profitability. They have no incentive whatsoever to go for risk, long-term, etc. This is just very difficult for them. Institutional investors are also stuck with this low-rate environment. It's very difficult for them to face the future and face the pressure of their clients. And DFIs, I mean, they are at the right place, but they will face pressure on multilateralism, including in this country in particular. So we have to help them, and that's what I've tried to lead when I was at the World Bank with a report we call From Billions to Trillions. And what do I mean with billions to trillions? We know the SDG, and I'm glad Vinit and I are sharing this. The SDG, or whatever or the sustainable investment requires trillions every year. And public money is in the billions. It's as simple as that. So how do you move from the billions? Again, in a $100 trillion GDP world, you have 130 billion of ODA every year. 100 billion of climate commitment. It's very little. So how do we use this very little but precious money to get to the trillions? And that's where we have to build not only, I mean, the ecosystem, but the system, the operating system to make this work and combine forces. And again, it's difficult. You have a cultural gap. I mean, the MDB doesn't speak the language of a pension fund, and the pension fund doesn't speak the language of an MDB. So it's not going to be like this overnight. So let's put people together. Let's do PPP. All these things are great. They are difficult. So we have to recognize this. We should not fool ourselves. But this is really the most promising area we have. So my call is for action. Let's use what we are in this room to make a difference in the coming years. But it's not granted. It's difficult, and we have basically to roll up our sleeves and move.
You mentioned the SDGs. I'm going to throw it open to the room in a second, and you can always ask questions via the app. But the SDGs, we were very rude about the SDGs in the Economist, and so there were way too many of them, and basically they lost their impact as a result. Why were we wrong? Who wants to take that?
Well, if I may just follow up on that, you might be right or wrong. I don't care at the end of the day. Well, first of all, it's not the first time you are wrong. You have been right quite often. No, but my point is, it's very important. When you had the Millennium Development Goals in 2000, then the Sustainable Development Goals, it's the first time in the history of this planet that we collectively agree on a set of goals. Right or wrong, not very important, but at least it's not just a human rights declaration, etc. It's something that we agree to reach collectively. That is very important. And we can laugh about it, but at the end of the day, 193 heads of state have signed it. My president has signed it, so I feel committed. And I should ask him to be up to the expectations. So I think this is important. We have agreed to a roadmap for everybody. We don't need to redesign the whole system. We agree on the roadmap, how to get there, how to put the money, and that is what we are talking about here.
But we do have to redesign the system so that we can reach those goals.
Yeah.
And the exciting thing is to see corporate leaders that are starting to integrate into their overall operations how they will help in the reaching of those goals. It's really the first time that corporations have been part of the development of the SDGs. And so I agree with you. They're what we have, and they are a metric for us to see how we're doing on some really critical goals that are pushing us toward our humanity, the real questions about who do we want to be. And I loved when Erica Karp before talked about what success is, that if we continue to define success based on a single metric, we're going to get where we're going. And this is a different moment in history where we are going, I think, a tectonic transition. And so it is time for us not to work at the edges, but to really look at the center. And this is something that at least has a North Star for people to work toward.
Yep.
So on the SDGs, I agree with Jacqueline's point that we have to change the definition of the bottom line. But the good news is, I'm a former banker, so I have a similar sentiment, which is when you're looking at it from a finance perspective, the bottom line still matters. Now, the commission that we're all on is the Business and Sustainable Development Commission, and they've actually produced a report which shows that if companies become sustainable, loosely defined as following the SDGs, but the report goes into it in more detail, we will realize $20 trillion of additional revenue by 2030. So there is a real tangible financial benefit from being an SDG compliant company. And this is a fantastic report that I think is a good platform for companies to use to incentivize their managers and your MDs to invest in how you can make your company more sustainable.
This is Dan Hansen with Jaroszewski. If you don't mind, I thought it'd be fun to ask a loaded question. And maybe invoke the moderator a bit, because there's the Sustainable Development Goals. I think the Economist article ended with like the road to somewhere is paved with good intentions. And so there is this controversy, and I think through a number of panels over the morning, there was sort of the role of private enterprise and how Impact Unleashed will drive, in private capital can unleash change, versus there has been this pretty direct, I think, insinuation in a couple of comments over the morning that a non-friendly regulatory framework or administration would make a difference. And I think there's a counter view that, it's private capital. It's got to be sustainable and economically self-motivated. So if I can try and turn that into a question, it's it seems to my vantage is like that's a false argument. I don't think there's a one or the other. And just I'm wondering across the panel where you have, in particular on the panel, a very private impact perspective, but conceptually it works. It just works as well in the public markets. Mm-hmm. And maybe the moderator can reflect that perspective that unleash the market forces. The consumer is going to buy a bottle of water that they want to buy. It doesn't matter with a regulatory framework. The consumer's got to be convinced it's clean, that there's an ethical supply chain, et cetera. So isn't there too much fuss about whether it's administration, strict regulatory, or a loose regulatory construct of SDG or whatever? Isn't there a little too much fuss over the regulatory?
The market will out. Is that what you're basically implying?
Discuss.
Okay. Maybe Vineet, I'll come to you on this, and it sort of brings us into the area of scale as well. So, is it possible? How easy is it to scale? Because that's the thing that makes the sort of the market most excited.
Yeah, and I actually, to some extent, agree with you that people always find reasons of not doing things. So regulation, difficult regulation, et cetera, becomes. But the truth is, as you rightly pointed out, if you actually produce the right thing and you have the right argument, the customer decides it, and everything else is just a paraphernalia around it. So scale, and I think the more important thing is both impact and returns are outcomes. They're not inputs. So the input is actually taking the risk, identifying an opportunity, identifying a management team that actually has the ability to build a product that the market would buy, identify a market segment that has willingness to buy, and then you will have an impact and a return, and both needs to be measured. I always get into impact investing where people are trying to discuss impact and returns. Unfortunately, they are both outcomes, both not controlled by any of us. 10 years later, by the time the fund closes, most of us have forgotten what we committed, actually. So I generally go to my LPs and say, write down whatever you want. I'll agree to whatever you say, because by the time I'll come back, most of you will get transferred. I will quit the job in any case. So I will be the only guy who would know what I committed. So that's how, unfortunately, it has worked with almost 90% of my LPs. The person I agreed to, committed to, and the person I actually am talking to when I'm exiting are just two different persons. So
I see a very different world that is emerging that is not necessarily about government regulation, nor is it just the private sector. That what's so fertile about this moment is that we can start to experiment in many different ways. And so just two quick examples where I'm seeing a confluence of amazing entrepreneurs that have consumers that are demanding greater transparency and better conditions for workers. With new technologies, smartphones, so that we have radical transparency. So in the coffee business, where we've invested and have been both burned and seen successes, historically, we've essentially paid farmers whatever the global commodity price for coffee is, which has been really dictated not by supply and demand, but more about futures trading, derivatives trading. And so we see these farmers making 50 cents a day, $1 a day, for the same coffee that we spend $18 a pound for in the West Village. What the new crop of entrepreneurs are doing, granted at the margins of coffee, is to recognize that even fair trade and fair trade certification is kind of outdated. That the new millennial consumer cares so much about these farmers being treated well and being paid well, that we've now got 2 companies that are negotiating with the farmers based on their production costs, adding what everyone in the chain considers a fair margin, agreeing to 2 to 3 year priced contracts, 3-year price contracts, and upholding them. That is a radical change that I would say needs moral imagination to see these farmers as equal partners, and Bertrand used the word trust. This is really about creating communities of trust that we've never seen before in a world where we've been so disconnected from each other. And so there's no regulation here, and yet there is a consumer that's starting to watch. Companies that like Stumptown and others that are starting to play. Farmers that are starting to have more trust, and we're seeing their incomes change. It's small, it's new, it takes long-term patient investing, but boy, does it hold hope to show a future of capitalism that really is more inclusive.
Bertrand?
No, I think your point has been debated for ages, and I think it's a very important point. This is what market economy is about. How do you combine public and private? And again, it's a difficult combination. I come from France, where it's been an ideological debate for ages, sometimes teased by the economists, actually. And so on the one hand, private sector suspect the public sector, and sometimes rightly so, to be conservative, sometimes to be corrupt, to be slow, to not understand things, etc. And vice versa, the public sector suspects the private sector to want the reward without taking the risk, to be very simplistic. That's the bad news. The good news is that we have to work together. None of the objectives we are discussing can be achieved by the private sector alone or by the public sector alone. So I think one of the big challenges that we are facing ahead of us is how we make these people work together. And this is about trust. If people don't trust each other, you cannot force through regulation anything. So I think market economy is about combining the right regulation, the right incentive, and part of the incentive is consumer pressure. If the millennials want this, let's give them this. If we all collectively want our asset managers or pension fund to move our money in that space, they should do it. So that's part of the incentive. The regulation should help. And then play the market economy at its best. This is allocating money under these incentives and resources. And again, that's what I'm trying to do in my new shop, Blue Orange, is to combine these forces by partnering with an MDB and say, what can they bring to the equation? What can we bring? And how can we do things together? This is really, for me, the biggest challenge ahead of us. If we stay stuck with it's either or, it's not going to work. It's and. But the end might vary between France and India and the US, etc. That's for sure.
Amy, we're kind of describing a world where the consumer kind of exerts pressure, and that changes behavior. And I think kind of in our mind, we probably have a picture of a Western consumer. But within developing countries, is there a potential for the consumer to exert leverage in that way? Does that happen? How can that happen?
Well, I think specifically in Nigeria, if you expand the definition of consumer to mean a private sector actor that has buying power, and that would encompass the real private sector, yes, that has power to change. I think the first thing we have to recognize is that regulations are not made in a vacuum. Certainly in emerging markets and increasingly in developed markets, regulations reflect the will of the most powerful people in society. So this isn't a fair, even regulatory environment we're talking about. In Nigeria, we had a situation where for over a decade, our company was suppressed by regulations that were put in place to benefit a particular monopoly, which was caught up in government rent seeking and so on. And that was a real problem. But what changed that was what Bertrand and what in a way we've all been saying was our success by building our company using purely private finance, reaching directly to the consumer, who in this case is our large companies, adding value to their businesses, and then proving to the other stakeholders, including the people in government, who were caught up in this unfortunate system as well, that there's an opportunity for creating mutual prosperity. So yes, I think it works in every situation, but the consumer is going to be a different animal. You know, it's going to be multinationals in some cases. It's going to be real private sector, and small individuals living in Soho and others.
I'm going to finish with a question to all of you, a very simple question, which is if you want to have most impact as an investor, should you be concentrating on the developing world, or you should be concentrating on your domestic market if you're sitting in the States? Bertrand, do you want to start and then come back to me?
Yeah, I mean, I will just repeat what I've heard from large European life insurers. In today's world, your alternative is limited. Either you buy zero-rate German bonds, which doesn't give any service to Germany or France or the Netherlands, because it does not incentivize this country to do the reform, because if you have free money, why should you bother to put your people in the street? It doesn't help your clients, because you don't bring them any money, and it doesn't help the world. So where do you have growth? Where do you have prospects? Exactly what Vinod said, it's the emerging world. So if we can find a way to attract, in reasonable terms, this money, part of this money out of the Western domestic market into emerging world, this will be good for the countries, good for the world, and good for the clients. So that's really the challenge we are facing. But to get there, we have to break some boxes, and we have to be a little bit smarter than the system, which is difficult. But that's really, for me, the big challenge is this one. How do you move from this place where we are risk-averse and stuck to a place where we are a little bit more imaginative than we usually are?
Jacqueline?
I think we're at a point in history where we no longer have a developed and developing world, but we have aspects of the developed and the developing worlds in every country, including the United States. Because of that, there are enormous both inefficiencies, bureaucracies that can be disrupted, and therefore opportunity for investing, particularly if you are looking to create impact and change. And in the United States, the three areas that we're focused on are workforce development, healthcare, and financial inclusion. And so for me, the whole world needs this. Again, we've got to figure out who we want to be as a world and where our capital combined with our personal yearning can make the most change.
Vinod?
To me, impact is an outcome. So really, it totally depends on, I think the developed world all the money that they have should invest in their, developing world should invest in their countries. But the developed world can actually divide that capital. Part of it, invest in your own country to make sure those who feel left out are brought into the mainstream, and the remaining, try to earn money so that you can use that money further to support those people who are not part of the mainstream.
And Amy?
I think the most powerful thing about the SDGs is that they empower us. They empower us as individuals and as citizens in America and in Nigeria and in India. They empower corporations and governments. So the most important thing is to use that empowerment in a rational way. And if you use it in a rational way, you will end up investing sustainably, because that's the only rational decision to make right now.